Hello everyone, this is L Trades and this is the market update for the 27th of August 2022. So let's just dive right in. Alright, first of all, we're looking at Bitcoin. If you read the report or if you haven't, I'll just go over what I said. Basically, on the higher time frame, on the weekly, there are a lot of signs that Bitcoin has actually bottomed around this area for the long term. So we have weekly bullish divergence, which means the lows are becoming lower, right? The lows are becoming lower, but the negative momentum is decreasing, which is getting you a divergence. And it's another way of saying that the sellers are getting exhausted. So they're losing power, right? Every time the second island was made, which confirmed the bullish divergence on the weekly, was exactly when BTC has bottomed for the past two bottoms. And that's exactly what we have now. We've actually already confirmed positive momentum. The RSI is the lowest it's ever been, which has always also been an area where BTC has bottomed. So, did BTC bottom? Well, there is a lot of interesting stuff. First of all, what I just said, and also the fact that we have, let me fix that for you. We have respected the 2018 high as support and we're still above it. Now, what can we look out for? Well, a macro economy for starters. But before we get into that, let me just finish off with the TA here and tell you that we are under the 200-week moving average. Okay, that's this light blue line. BTC has been under it before, but it has never consolidated under it. It means it's never actually closed weekly candles below it and then rejected it before. So this is a new paradigm. We can contribute that to a change in macro factor, which we've never actually had before. So BTC has never been through an environment that we're in now. And this could explain why it's doing this new type of thing. Now, textbook-wise, consolidating under the 200-week, especially for the first time, is actually bearish. Because all it's doing is making a lower high under a very strong resistance, which has historically sent most assets or commodities into lower prices, right? So we do have very strong support below us. And what we should watch out for is if we do break that 2018 high of 18 to 19K, and of course our local lows of 17 to 18K. If we break that, and that invalidates the bullish divergence, we can go well below, maybe even reach 15 and 10K. But we can't disregard what we started with, right? We do have bottom signs. So where do we look for, right? What can we do? Should we start buying now? Should we start selling now? Well, there's no signs to do either. But what we can do is we can look at the SPX. And we can see that the pattern that's forming now on the SPX is very similar to the one of the 2000 tech bubble and the 2008 housing crisis. What happened in both? Well, you had a big shot up for a long time. They cut the 200-day, they got destroyed, and then they pumped to the 200-day moving average, which is that dark blue line. They made hidden bearish divergence. What that means is you get lower highs but higher positive momentum. It's hard to see, but you can see it right here. And they rejected the 200-day moving average where these arrows are pointing, and they continued into the global financial crisis. That's happened in 2001. It happened in 2008. And right now, the exact same thing just happened. We have, I'll go closer for you, we have rejected the 200-day moving average with a beautiful bearish hammer candlestick right there. Just touched it right there, and straight after, no surprise, we have a massive move down. So what can we do as speculators? Well, so far it seems to be mimicking the global financial crisis. If you think the economy is stacking up for further downside, and there's actually the narrative that can continue it downwards, then maybe you can bet on the short side. if you're interested about crypto and BTC, which I am mostly, then what you'll be looking to see is if this can break the formation, if this can break out of the fractal or the structure that the past global financial crisis or the past bubble pops have had. And so far it's following them, right? So what I would like to see is one, BTC get above the 200 week and confirm that it's above it. And two, SPX actually goes up to the 200-day and breaks it and confirms a close above it, which it hasn't done in 2008 and 2001. Then we can say that we're flipping bullish. But until then, this is a very, very dangerous situation, okay? We also have a real estate crisis in China. I know that you're not hearing about it much because the news is mostly focused on Ukraine and on other things, but China has a massive real estate problem where the average cost of a house is about 20 times the income. To give you perspective on that, in 2008, the average cost of a house was about 7 to 8 times the income, the average income, right? So this is much more catastrophic. And if China does that, it could wipe $350 billion from their economy. And we all, as we all know, it's the second biggest economy in the world. And we're all interconnected like a web, right? So if they fall, we all fall with them. So I wouldn't be surprised if the catalyst for this breakdown, if it was to follow 2008 crisis, would be because China real estate bubble pops. So this is something that we should really look forward to, really pay attention to. And that's all I have to say for today. I hope you enjoyed this, guys. I'll come back with another update. And see you next time. Bye-bye.